Gold and silver both traded in range and yet again honoring the support levels strongly as gold failed to sustain below 1715 levels. I had told several times 1715 is a very strong support. Now what is going to happen today, as today is the key event for Fed's interest rate decisions, market may act volatile lately in the day. You have to be cautious. Now what should be our position, which position we should take in order to make profit, we will see with the help of candlestick charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon. First we'll look into gold followed with silver, and the next analysis on gold will be up before the US cash session. Don't miss to watch that, because that is going to be very important as it is going to be near to the Fed's interest rate decision. Now before I come up with the hourly charts, let's have a look here at the charts and the indicators together. Now look at the hourly charts here, clearly getting the support here at 1715 levels, and gold is consistently getting the support here. Yes, if you see it trading above 1720 today, you can go long above 1720. You can stay long in gold and we can expect a rise from there. We can expect that it may bounce back. Right now it is trying to trade at a narrowing triangle, confirming that it is looking and waiting for a breakout. It is not willing to go down for sure, it appears. Directional movement is bearish. Stochastic is looking downwards. The MACD is not indicative of anything. RSI trading flat. On the 2-hour chart, similar is the story. The support there at 17, 12, 13 is good. As you can see here, this is the bottom of the channel and the support line exists there, and on the upside 1720 level should give it a little resistance. Be watchful of these two, 1710, 1720 rather, I will say. Now in between this we have to be cautious there. It may try to drop till towards 17, 12, 13, and in fact 1710 is also possible. Only breaking 1710 go short. Now look at the 2-hour charts. On the 2-hour charts it is given a breakout here, as this candle is giving a breakout, and this is on the downside. We have to be cautious of this as it is a bearish breakout, and hence we have to be cautious. Any breakout below 1750, yes, you can go short below 1715, but the support there at 1712 and 1710 is strong. You have to be watchful of this. Below that, yes, you can expect a sharper drop, but already on the charts, on the candlesticks, it is given a breakout on the 2-hour charts and it is a bearish breakout. Directional movement is bullish, trying to converge. RSI is also trying to converge for a bearish crossover. MACD is trying to converge and trade bearish right now. It is not neither converging, not diverging either. RSI looking downwards on the 3-hour charts. On the 4-hour charts, similar is the story. And yes, above 1720, you can consider that as a bullish reversal, and then you can stay long for further highs. Directional movement is slightly bullish, you can say. Stochastic looking upwards here. MACD is wide divergent and bearish, and RSI is sloping downwards, indicating little bearishness out there. And on the 4-hour chart, similarly, if you look at, see on the 4-hour charts here, lower highs are consistently there. The support there at 1715 exists, and below that, yes, it may come down till towards 1712, 10 levels, and below that, yes, there could be a sharper fall, as I have told many a times before that it has to cover this, you can say, volume or liquidity gap. Probably it can take a dip from there if it continues to trade below 1710, then and then only. Look at the 4-hour directional movement is diverging and indicating little bullishness. Stochastic looking downwards. The MACD is wide divergent and bearish, and the RSI is looking downwards too. Similarly on the daily charts, if you look at on the daily charts, now look at this on the daily charts, almost flat bottom out there. Rather, you can see lower highs have been lower lows and lower highs have been done. So lower highs, higher, and you can say lower lows. That is what previously we have seen. It is a narrowing triangle here on the daily charts. It may try to consolidate, and any breakout above 1720 and any breakout below 1710, either ways you have to take your positions on the upside and downside. Do not miss that chance, because it may give a strong reversal. Look at also the last two candles. The bears were not there, though it traded sideways, and yes, the probability of reversal exists at right now. Yesterday it ended indecisive, and if it trades above 1720 and then specifically below 1732 zone, see, be watchful of here at 1726, and after that 1732 zone. If it breaks beyond this, definitely a very strong move will come, and hence you have to trade with 17, go long at 1720. That is one possibility. Also, do not miss that below 1710 it can give you a drop, and this time the drop is going to be also equally strong, which might take it till towards 1705, 1698, and then 1690, 1680 is possible. And this is one part of it, and hence you have to always trade with the stop loss, trade with a strict stop loss, and trade with the trailing stop loss. Also, you have to keep shifting your stop loss to first support levels or the first targets. If you see it continuing it in one direction, at least preserve some of your profits. That is the ideal way to trade. So right now for the day, it appears though on the hourly charts and 2 hour chart that it may try to reverse and break out. However, the 2 hour charts has given a breakout on the bearish side, on the sell side, and hence which is making me further cautious there. So trade accordingly. Do not trade between 1710, 1720. Above and below, take a long and short position. On the upside, 1725, 1732. These levels you should watch out for. Beyond that, it is going to fly high. Then you can expect 1740, 45 levels. Beyond that, it will fly. On the downside, if it breaks below 1710, remember it has got the supported 1705 and 1698. It can reverse from there, as it is going to be a swingful day. Again, achieving the lows, it can reverse strongly. So be watchful, be careful, trade accordingly. Now let's have a look at silver. Silver is again back to 1860. Those who follow me regularly, I have marked these levels many a times. 1860, 1840. These two levels are my favorite, and these two levels are favorite for silver too. Now look here on the hourly charts, you can find it is getting a definitive resistance at 1870 levels. I had told you yesterday that 1870 levels you should watch out for. Any long entry is only recommended above 1870. Yet again, it is getting the support resistance out there. It is trying to trade with a drop. However, look at this. It is giving you higher lows. So see this. First base was created 1840, then at 1850, and now at 1860. Every 10 points, it is trying to create a base, and it is trying to trade bullish with this as support. On the upside, yes, it is failing to sustain above 1870. Beyond that, this is definitely going to break 1880 and then towards 1900, march towards 1900. So this is one observation. And if you look at the 2 hour charts, it is bullish, however, trying to converge. The stochastic looking downwards. The MACD is trying to converge and crossover for a sell. RSI trading flat on the hourly charts. Look at the 2 hour charts now. On the 2 hour charts, this is trying to give you a breakout, taking the support at 1860 and then the support at 1855. This is very strong support on a 2 hour charts, 1855 levels. So be watchful of 1855 now, and below that you can expect 1850 and 1845, 40 zone should appear, which is the next support zone. Look at this, it has created higher base, and also it has completed the retracement on the upside on the 2 hour charts. So yes, from here the drop is going to be equally sharp, and hence you can go short at 1855. Below that, yes, you can remain short further for further drop towards 1845, 40 zone, and below that we may see a crash. Directional movement is trying to converge, crossover for a bearish move. Stochastic looking downwards. The MACD is trying to converge here. It was bullish till now, and RSI looking downwards. Strong bearish indication on the 2 hour charts. On the 3 hour charts, look at it here. As I said, 1855, go short at 1855. See on the top, it has got the resistance at 1870, 72, and it is trying to trade with a drop. Next support at 1850, and then towards 1840 levels. Very strong support, and this time, if it breaks, this is going to be a sharper red candle, which is going to take it further down. Look at this, it is trying to trade in this, it is trying to trade in this. Any breakout below 1850, 1840 definitely should be considered a very strong bearish move now. Directional movement is moderately bullish. Stochastic is converging, crossing over for a sell. MACD is trading in green, RSI trading flat, and on the 4 hour charts, if you look at on the 4 hour charts, it is trying to take a support at 1855 levels. Be watchful. On the upside, the resistance there at 1875. So I will rather say in between 1855 and 1870 levels, do not trade in between these 15 points. Below 1855 also there is a little support at 1850. If it breaks below 1850, go short for 1840, and this time it is going to hit 1830, 1820 levels also on the downside. Directional movement is crossed over for a bullish move. Stochastic is looking downward. The MACD is wide divergent and bullish. RSI is looking downwards, indicating little bearishness there. And if you look at the daily charts, now look at the daily charts. 3 candles, lower highs, and this time This candle almost formed a double top, now trying to retrace back. How far it could retrace? 1840 is the definite support. Below 1840 we can expect a sharper crash. So today you can take a short entry at 1855, wait for 1850, and then the next target is 1845-40 zone. If it sustains and breaks below 1840, it will bring more fall and it is going to drop heavily till towards 1800 levels. 1820, 1800 is the next target. So be watchful of 1840 today, and on the upside be watchful of 1870. If it sustains above 1870, the 1880s levels are the next target, and beyond that 1890, 1910, 1920. See, on the upside it has got resistance till toward 1920. I have reiterated it again: 1880, 1890, 1900, 1910, 1920. Five layers of resistance out there, and probably it can reverse any point of time till there if it tries to in fact rise. So you can go long at 1870, go short at 1855. Do not trade in between these 15 points. Above and below, take your positions accordingly. On and extreme bearishness can be seen if it trades below 1840, 1835, and bullishness can be seen if it trades above 1890, 1900 zone. Take your positions accordingly. Trade with a stop loss, trade with a strict stop loss, trade with a trailing stop loss. Thank you very much. Have a great profitable trading day ahead. Thank you.